Did you know that the upcoming US elections could cause your investments to crash in just 24 hours? But don't worry, all is not lost. The markets are tense, and your money is at risk, but there are clear ways to protect it and, even better, take advantage of huge opportunities. Stay until the end, and I'll show you how to keep your investments safe, and in which sectors you can profit, no matter who wins the election. The U.S. presidential elections are not just a political change, they're an economic earthquake. Every 4 years, the fate of global markets hangs by a thread, and this time will be no different. Policy shifts, immediate market impact. What most investors don't know is that each candidate brings an economic agenda that could boost some sectors and completely destroy others. Remember the last elections? In the blink of an eye, we saw entire industries react with panic or euphoria. For example, changes in fiscal policies, like corporate tax cuts or increased infrastructure spending, can create a boom in industries like construction, while sectors more dependent on government support, like healthcare or technology, could falter under stricter regulations. Polarization plays a key role. The most dangerous factor is that we are living in an era of extreme polarization. If one party wins, markets could anticipate aggressive expansion. If the other wins, we could see significant declines in key sectors. We're not talking about small fluctuations. We're talking double-digit moves in just days. Fiscal and monetary policies determine the future of money. But wait, it's not just about taxes and spending. The monetary policies the next government enforces are crucial too. If the new president pressures the Federal Reserve to keep interest rates low, it could fuel a bull market. But if rates are tightened, we might see a massive correction. The future of money is on the line. Investors must act ahead of time. The lesson here is simple. We can't wait for the election results to react. Smart investors are already making moves to shield their portfolios from any possible scenario, because as you know, inaction in finance is the most expensive decision. Now, let's talk about what really interests you. Who will be the winners and losers in this electoral race? Make no mistake, the elections are going to transform entire sectors, and smart investors are already positioning themselves. Energy, the giant in play. The energy sector is always a battlefield in elections. If a pro-clean energy candidate takes office, you can expect a boom in renewables. Solar, wind, and energy storage companies could see their stocks skyrocket. But what if the other side takes control? Oil and natural gas could make a comeback, regaining strength with more relaxed regulations. Beware. A shift in environmental policies could either cause renewables to plummet or put big oil companies back in control of the global market. It's an all-or-nothing game. Technology, innovation versus regulation. Here's where things get interesting. Technology is one of the most volatile sectors during elections. Big tech companies like Google, Amazon, or Facebook are under regulatory scrutiny. A president looking to impose more control could tank their stocks overnight. On the other hand, a more lenient approach could allow these giants to keep raking in astronomical profits. But watch out. Not all tech companies will fare badly. AI, automation, and cybersecurity startups could be the next big boom, especially if incentives for technological innovation are promoted. There are hidden opportunities here for savvy investors. Healthcare, a market in danger or with opportunities. Healthcare is another sector walking a tightrope. Changes in healthcare policies could be either devastating or extraordinarily lucrative. If reforms are implemented to lower drug costs or expand coverage, we could see a violent adjustment in pharmaceutical companies. But there could also be big winners, like biotech companies developing innovative solutions for chronic and emerging diseases. Don't just sit back and let the market decide for you. If you identify the right sectors, you could win no matter who takes office. This isn't just a gamble, it's pure strategy. Defense and construction. And let's not forget sectors like defense and construction, which have historically been the biggest beneficiaries of massive spending policies. If new budgets for infrastructure or defense are approved, these sectors could experience exponential growth. The time to position yourself is now. Now, you've seen it. The uncertainty of the elections is real, but that doesn't mean you should sit back and wait for the worst. Here are 3 key strategies to protect your investments before the markets make decisions for you. 1. Smart diversification. Don't put all your eggs in one basket. Diversification isn't just a buzzword in finance, it's your first line of defense. Spreading your investments across sectors less sensitive to political change, like consumer staples or utilities, can reduce volatility in your portfolio. These sectors tend to be more stable, with consistent demand regardless of who wins the election. What does this mean in practice? Don't put all your capital in tech or energy. Balance it out with sectors that keep running, no matter what happens in Washington. 2. Leverage safe haven assets. Be smarter than the market. In times of uncertainty, experienced investors turn to safe haven assets, gold, bonds, and even some cryptocurrencies. These assets tend to gain value when markets get nervous. Protect part of your capital here before wild market swings take it all. And don't forget, gold has been the classic safe haven during crises. But in the digital age, cryptocurrencies are also playing that role. Don't ignore them. 3. Keep liquidity. Don't get trapped. In uncertain times, cash is king. Keeping part of your portfolio in cash or highly liquid assets will allow you to take advantage of any opportunities that arise post-election. If the markets drop, you'll have the power to buy cheap while others run scared. Remember, liquidity gives you flexibility. It's not just about avoiding losses, it's about positioning yourself for the next big market jump. Now that you know how to protect your investments, let's talk about the really exciting part. The opportunities you can't afford to miss. Here are the best areas to invest in right now, no matter who wins. 1. Renewable energy. The future is here. As I mentioned earlier, renewables are booming. Governments around the world, regardless of political affiliation, are pouring massive funds into the energy transition. Solar, wind, and battery storage companies are seeing explosive growth. And guess what? These companies will keep thriving no matter who wins the election. 2. Cybersecurity. Protect the digital world. Cybersecurity is another sector that's not going anywhere. Quite the opposite. As the world becomes more digital, the threats increase, and companies and governments need protection. Regardless of the election results, investment in cybersecurity will be a constant. 3. Health innovation. The next big revolution? Have you heard about health innovations? Biotechnology is advancing by leaps and bounds, and the elections could only accelerate this growth. Vaccines, gene therapies, and new treatments are capturing the attention of the smartest investors. Here's the key. While many investors are terrified by political uncertainty, you have the opportunity to get ahead and position yourself in sectors that are primed to win, no matter who takes the White House. The time to act is now. And there you have it. The future of your investments depends on the decisions you make today. Don't wait for the markets to catch you off guard. Prepare and act now. If you found this video helpful, don't forget to subscribe and hit the notification bell so you don't miss out on the next key opportunities. And leave me a comment. Which of these sectors interests you the most? See you in the next video, where we'll continue unveiling strategies so you keep winning, no matter what happens.